Happy New Year.
Happy New Year.
Happy New Year. Happy New Year. Welcome, guys. Today is, what is today? January 5th, 2021. The longest year in history is over, and we're moving on.
Yes.
Well, welcome back, guys. This is We Talk Money, episode number 39, and we are doing this over teleconference today because our producer's out, but got a ton of stuff to talk to you guys about. Markets have been on fire, so much development in the crypto space, a lot of stuff happening in the economy and with stocks. And yeah, I don't know. What do you guys want to kick this off with?
I think we should kick it off with a reflection of 2020 because like a lot went down in 2020, but more specifically on the investing side, it was an outlier year for a lot of reasons. And there's been this kind of debate going around on Twitter about people's performance in the stock market in 2020, kind of easy. It was an easy money grab. Everybody looked like a genius, etc. And the debate of over if you did do well this year, was it a result of luck or was it a result of skill? So yeah. I felt like that would be a great place to kind of open up our first podcast of the year.
What do you think, Travis? Luck or skill? And by the way, yeah, why don't we just talk a little bit, I guess, about like how we did. It was personally my most profitable year ever. I know you guys crushed it also on the stock side. How did you guys do? And was it luck or skill?
Yeah, I mean, it was also my most profitable year ever. I believe I was up about 109%. And of course, I'm going to say it was all skill, but I think there's definitely some luck in there for most people. It's interesting. My Twitter feed was filled on January 1st with all these investors on FinTwit that were posting 100 to 200% types of gains. There's a ton of people who made a significant amount of money in the markets in 2020. And, everyone looks like an investing genius right now. So it's in the markets as a whole, the NASDAQ particularly was up 45%, 47%, something like that. The S&P was up, I believe, 17 or 18% for the year. So, 100% is still well outperforming the markets. So I think that, if you are at that kind of level and you didn't take some sort of insane type of risk and you weren't fully invested in one stock per se, then, you probably can have some claim to saying that you at least partially benefited because of skills. So, personally, I'm pretty proud of the results because I actually had a pretty significant hedge on for most of the year that cost me a significant amount of performance. And, we had gains in not only stocks that were in the technology and growth sectors, which were obviously very hot, but we also made really good gains in areas of the market that were value plays or recovery plays and things like that, stuff that we really deeply researched for weeks or months at a time. We also made significant gains in stocks that we had been stalking for multiple years that we made good entries on during the March crisis when a lot of people were not buying. So I think that we made a lot of really good decisions. We weren't 100% accurate with everything we did last year, but I'm pretty pleased overall. Now, that being said, I don't expect to repeat that performance anytime soon. Anytime you have a triple digit gain in your portfolio, if you're managing your portfolio with any like semblance of risk control, it's an extraordinary outcome. So that's kind of my thoughts. Yeah, that's right. I'm talking about stocks specifically, but yeah, crypto is a whole
of course. Yeah. And like you said, I mean, you don't want to get used to or expect those kind of gains every year, because then what happens is you start taking outsized risk and you start getting reckless. And then you're like, oh, wait, yeah, I was up massive last year, but how did I get destroyed this year and give back half my gains or more? Right.
Yeah, I think that this is going to be a really key kind of 2021 and beyond, because a lot of new traders and investors came into the market in 2020. And there's going to be this mental shift that they're going to end up going through eventually when they realize that 2020 is not an everyday type of year. And so I feel like there's going to be a lot of wake-up calls down the road. But what I'm really proud of in terms of what Travis and I have been able to do in 2020 with our investing portfolios is, we really, neither of us had Zoom or Tesla in our portfolios, and we still had triple digit returns, right? So a lot of people, when I've talked about it with people, you probably have Tesla in your portfolio. No, I don't. Like, I was still able to have that type of performance without taking on huge, huge risk, high volatility type of high flyers. Like Travis outlined, we had been studying these companies. We had been entering into these companies even before, some of them even before the pandemic. And it was the work that we did in, the slow time that we were able to really put the pedal to the metal when the market environment shifted, and we knew exactly what to do in the fast time. So I do think that it was a combination of it's almost like the more you kind of sharpen your skill set in investing, the more lucky you get when those market environments come to you, if that makes sense.
I think that's a great point, right? It's like being prepared puts you in a position to get lucky, right? Like a lot of people look at like me and other early crypto investors and they say, oh, you guys got lucky. No, we did the work and we took on risk when nobody else wanted to, right?
Exactly.
So preparation sometimes looks like luck in hindsight, but it's that work that you do in the depths of bear markets that actually give you the profits when everybody else is buying.
Well said.
Chris, what's your thought on the luck versus skill debate for crypto? You guys had an incredible year on the crypto side as well, but there's 95% of all Bitcoin holders who are in profit, or 99%, whatever the number is today.
Yeah.
So there's a case to be made that, no one's a genius here, at least over the last few months. What's your take?
I would rebrand or reposition that statement. Instead of saying skill, I would say conviction and just like courage to buy when nobody else wants to buy, right? Because if you're buying Bitcoin now, the expectation is that price is going to go up over time, but the real profits and the reason why we absolutely crushed 2020 is because we were buying in the depths when everybody else was freaking out, right? If we look at a daily chart, so this is just kind of like a recap of my year in Bitcoin. I had a trade back here. We took a long, it's actually over here, where we bought, around the 7,500 or 8K level and then rode it up to 10K. And then coronavirus fears kicked in. And then what a lot of people don't remember is what happened in March, where Bitcoin fell by 50% in less than 2 days. And we were buying into that. Unfortunately, I did not get the lowest fills. I was getting more fills in like the 5,000 and 6,000 level. But in our community, we had guys like Crypto Hustle, aka Rocky, who literally low ticked this thing in the 4K range. So, and then I was building my size through the first half of the year in through the $6,000 to $8,000 range. And then my last ads, I was trading in and out of this a little bit, but I was building and accumulating all the way through 10K, right? So it's that conviction and that, I guess you could call it skill, because I've been trading Bitcoin for so long now, full time since 2013. I've been through these market cycles and I know what to expect, and I know how to read the market sentiment on, crypto Twitter and in the mainstream media and just in our community in general. And, I feel like we're so in sync with the crypto markets and the Bitcoin market that to us, it feels like shooting fish in a barrel. And obviously the demand side has to be there, right? Like we can have all the conviction in the world we want, but if nobody else demands Bitcoin, we're going to lose money, right? So we predict that Bitcoin's going to grow and we buy when it's bloody, and we win because our thesis is right. So you could call that skill, you could call it conviction, whatever. I'm just really proud of our community. I mean, the guys and ladies that I've talked to that have made life-changing amounts of money in the last 12 months is just incredible. And I think that's why the three of us do what we do, is to hear those stories and to see the results that people get like that.
Yeah. No, that's absolutely right. It's interesting because it's also interesting to think about how many people still don't own cryptocurrency and how many people still don't understand the value that cryptocurrencies can not only have on a portfolio, but also bring to all sorts of applications over the next decade or two. And so I'm a stock guy, and a lot of my FinTwit list, my following list, is people whose bread and butter is traditional asset classes like stocks, bonds, whatever. And there's still a shocking amount of them who still see Bitcoin as some like tool for criminals, that it's some, fake Ponzi scheme, that it's, the things that they're still saying in 2021 are amazing to me how clueless they are. You know, we've talked on this podcast a lot about over the last, year and a half about why we think some of these things could have value long-term that will surprise people. And if you're not even taking the time to try to understand why we're in the third or fourth time that Bitcoin has made a parabolic run, you're clearly missing something, you know, like Jamie Dimon, perfect example. Like, you've got to question yourself at a certain point and say, well, okay, if so many other people and now so many institutions are starting to come around to the idea that there is real value here, like you've got to like get past your own psychological biases. And there's still so many people that have not and may still not for many years. It's really fascinating.
100%. And, you know, think about this. Like, if you come from traditional finance and you put a lot of, I wouldn't say faith, but if you look at a guy like Jamie Dimon and you go, he's a great CEO of the, you know, one of the largest banks in the world. And he says shit like this, like, you know, this is the last time I talk about Bitcoin. Who cares about Bitcoin? People who purchase Bitcoin are stupid. I could care less about it. Right. And then, you know, we can look at transcripts where he says, if we have a trader that trades Bitcoin, I'd fire them in a second for 2 reasons. 1, it's against our rules, and 2, they're stupid. Okay. So,
wow.
And then, you know, we've been laughing about this for the past year because they've done a complete 180. Now, JP Morgan is coming out putting price targets at like 150 grand, right? So eventually everybody comes around. It's the people that resist the longest that end up paying the highest price.
It's like the perma bulls, you know, in the stock market, the Fed truthers that are, you know, they refuse. Or what did I say?
Perma bears.
I meant perma bears. That's what I meant. Perma bears. Sorry. You can see I have my bull and my bear in the background. I'm been seeing bulls and bears all day. So the perma bears were just like, they would not get into the stock market. The Fed this, the Fed that, stock market's going to crash, blah, blah, blah. And as the stock market continues to chug higher, you know, they're still saying the same stuff. And at least you got to give it to JP Morgan for turning around, you know, their bias.
Sure. Yeah. Come and pump our bags, JP Morgan.
Yeah. Whatever. Like,
I mean,
at least they turned it around.
I wonder what Jamie Dimon specifically thinks about it now, but I actually think Jamie Dimon, by the way, is a really good CEO. I mean, JP Morgan has become, over the last 2 decades, you know, the largest and most dominant banking franchise in North America, and maybe even the world, or maybe there are 2 or 3 in the world. I forget exactly where they sit, but they've clearly created a lot of value. You can look at the stock chart, you know, whatever metrics you want to look at. They are clearly doing a lot of things right. And Jamie Dimon's been at the helm, I believe, since like 94 to 95. And I think he's actually really smart. Like, when you listen to conference calls with him and the way that he talks about different asset classes and markets, like, he's very in tune with a lot of broad trends and things like that. The Bitcoin miss for him is super interesting to me, though, because he kind of refused to like really try to understand it at a deeper level. And I actually had, for a couple of years, a pretty negative bias against Bitcoin, similarly to him, because initially I thought that it was meant to be a replacement for transaction networks like Visa. I thought it was going to have a really hard time from a regulatory perspective, basically becoming a replacement for the US dollar and other fiat currencies. And I still think that, but where there's a lot of obviously interesting value is not only in stores of wealth and being a scarce asset, but also enabling a lot of the development in the space as a whole. So like, when I finally reversed my perspective a few years back, like, that was a pretty key moment. And I'm interested, like, to know if Dimon has gotten there yet, or if he still is like very, very much against Bitcoin.
I have a guess. And again, I don't know the guy, but my guess is he feels threatened by it. Not just Bitcoin specifically, but decentralized digital currencies and the tokenization of everything. And just, I feel like he is afraid of getting made irrelevant in a way. Like, you know, the squeeze has already been on banks, right? And with all these DeFi products coming out, like, all the innovation he probably looks at as a threat to his existing business. And if you're the king of traditional banking, yeah, you kind of have to take a hardline stance against this stuff, right? You are the incumbent that is getting disrupted. I don't know. What do you guys think?
In some sense, yeah. I think there's a large majority of JP Morgan's business, though, that is not really threatened by cryptocurrency, at least in its current state. You think about things like their investment banking division, helping take companies public, helping do M&A, things like that. I mean, eventually you could imagine security tokens taking share of some of that, but not really a big threat at the current moment. You think about things like just traditional like mortgages and like consumer banking. They do a great job actually in terms of the technology and creating, a pretty good mobile product, for instance, for banking and things like that. And just providing basic checking and savings accounts. That's not something I see really Bitcoin having a huge effect on in the near term. Maybe some other cryptocurrencies you could say are starting to potentially threaten that, like the DeFi space and some of that, where people are actually starting to move capital there to get interest on their assets. That could potentially be a threat. But like when you look at the trillions of dollars of assets at JP Morgan and the lines of business, commercial banking to companies, providing debt and equity capital, providing banking services, like it's just hard to imagine in the next 10 years, cryptocurrency really being a threat. But I guess like longer term, if you're thinking that you could be threatened by some of that, then you're definitely going to want to push back on it. So that's a good point. I guess maybe like today, not really a threat to most of their business lines, but if you think it could be in 20 years, then you have sort of a built-in bias against it.
Yeah, I think it makes sense what you're saying about M&As and all the non like retail banking services, right? But what we're facing right now, and this is what I've been thinking a lot about, and we talked about this about a month ago, and I said, look, in Q1 the OCC is going to come out with some guidance that's going to really get things smoking and create an even bigger waterfall. We saw that actually yesterday. The OCC came out and basically gave the okay for banks to start using stable coins. And I think this is actually a smart move from the US regulatory side. I've been like, how should I put this? I feel like I've been on a roller coaster with all this regulatory shit in the US. You've got Mnuchin and FinCEN that are trying to, basically KYC hardware wallets. And then over here, you've got the OCC, which is being crypto friendly and giving banks the okay to start using and participating in the stablecoin side of things to basically, in a way, replace the SWIFT system. Because look, they know that central bank digital currencies are coming out from all around the world. China's really pushing theirs hard. And the US either has to innovate and adapt or they're going to lose. Mm-hmm. And so I think this OCC news is one of the most underrated and underappreciated things because it opens the floodgates for banks to be able to participate in crypto. And it also shows that the US is not anti-decentralization. Like if they're saying we're okay working with stablecoins and we see the value in decentralized protocols over like SWIFT and all these old school, just outdated systems, I think that's a really powerful thing. And maybe that could further disrupt banks. I don't know. What do you guys think?
I mean, is there a world where banks and crypto seamlessly work together? I mean, isn't that?
Yeah. I mean, just like everything else, I think there's going to be a middle path, right? It's not going to be like one day we wake up and Bitcoin is the only currency in the world and that's all there is. I think they can work in tandem, right? And I think it's going to be.
They may have to, it kind of feels like.
Absolutely. Especially in the short term, right? Like past 10 years, who the hell knows? But over the next like 5 to 10 years, they're going to work in tandem. All I know is the way that the financial system looks today, I feel like is going to look dramatically different, even just a couple years out.
Agreed.
Yep. Absolutely.
And I'm sure the large financial institutions are kind of shaking in their boots a bit. I mean, they can't be completely dumb to the situation at hand. I mean, they are going to have to find ways to survive.
Mm-hmm. Yeah, it is.
And stay relevant.
It's very interesting. Square, one of our big winners from 2020, I think banks should almost be as worried about them disrupting banks as anyone else. So like they're facing threats not only from, longer term cryptocurrency and stable coins and things like that, but also threats from these innovators in fintech, like Square, like, like Plaid, like, all these companies that are starting to nibble at parts of their businesses. And especially on the consumer side, like you mentioned, where consumers just really don't typically have a great experience with traditional banking. And that's on the traditional banks. Like, they've really messed that up. And so there's all this desire from the consumer side to find other ways to do banking and to have their, the financial applications. So
they're looking for a nice user interface and a simplified experience, which is why Robinhood probably was so popular.
Oh yeah, Robinhood, Venmo, Square, Cash App, all these things are really starting to, even Goldman Sachs, to their credit, at least has their Marcus division, which is doing some interesting things. But these are the Apple Card. These are real threats to some of the core parts of the consumer side. I think what may be a little bit harder to disrupt is some of the commercial banking and some of the business banking. But in time, I think it's all up for grabs.
Yeah, 100%. I mean, I think we're talking about multiple things here. When we talk about Bitcoin, we're talking about the only true scarce financial asset there is, and that's Bitcoin is in a league of its own. And then over here you've got banking and DeFi and payment rails and all this stuff, right? Like, that is like just a very fast changing, messy space. It's a gold rush. It's a cash grab right now, right? I mean, we're seeing how much money, like you guys said, Square's making. I love that. I love competition. I love disruption. Creates opportunity for people like us as investors. It also makes things better for the consumer. But I think one thing that we can say pretty confidently at this point is Bitcoin's not going anywhere. The value prop is there. Institutions are coming in at record paces. I mean, we've been talking about this for the past few months now, so we don't have to beat that dead horse, but it's just not slowing down. And that's why, when we look at the price performance of Bitcoin over the past year from the March lows, it's up 750% from the March lows, and it was up a little over 300% on the year. So,
okay, Chris.
Yeah.
Sorry, go. I couldn't tell if you were finishing your thought there or not, but I do want to ask an annoying question.
Sure.
Okay. So the question on everybody's mind, that they are not in Bitcoin right now. They missed the boat and they're looking at it and they're like, damn it, I want to get in.
Yep.
Should they buy here?
Okay, here's to anybody that's going, I
just
want to
answer the question. Everyone's asking. They're asking me too.
For sure. I mean, that's the question, right? And that's why I'm so damn obnoxious on like my Instagram stories and social media, where I know like Facebook and Instagram, where the non-crypto people are. Like, crypto Twitter is the biggest like Twitter community, so I don't need to beat the drum of Bitcoin to them because they get it. But like, in our non-crypto circles, that's why I'm so annoying. I'm like that cousin you have that's always talking about Bitcoin, right? I'm the guy beating the drum. Like, you have to buy this shit when it's low and everybody ignores you. And then when it's expensive, then you get all the flood of messages from friends and family and fools, right? And it's like, okay, well, look, you should have bought, at the lows. Yes, that was much better. You should have watched my videos over the past 8 years telling you the best times to buy. But if you're just now coming in, that's okay. Don't feel bad. You haven't.
Because there are a lot of new people.
100%.
A lot.
Yeah. Actually, we could pull up the Google Trends data for this. Like, just now, only recently has the kind of the retail investor crowd started to come back. The first leg here. So, really the first move from like 10K to 20K, that was mostly institutions. Like, retail was sleeping at that point. It was only recently from this 20 to 35K move where, average mom and pop retail investors are starting to go, oh, should I buy Bitcoin now? It's when it broke the all-time high that we started to get these headlines, right? Like, this was the Financial Times. When was this? I think this was Monday, just a couple of days ago. Basically the top news headline was high flyer, Bitcoin value tops 30,000, right? This is when we start to get the mom and pop investors back. And let me just go to Google Trends. And And I just want to show you something. If we look at Bitcoin, you can see that only recently has the search volume started to come back. You know, it's like the end of December. Let's go. If we look at like a 5-year trend, you can see in the 2017 bubble, the interest went really, really crazy. It's only recently that this is starting. So yeah, there are a ton of newbies coming back into the markets. And this is my non-financial advice, right? Like, again, we don't give personalized financial advice on this show, but for anybody that's asking, what the hell do I do if I don't own Bitcoin, or if I don't feel like I own enough of it? You buy an amount that you won't panic sell if it goes down by 90%, right? So that number is different for everybody. It might be $10 for somebody. It might be $1 million for somebody else, but just buy an amount and then think like, what would I do if price went from 35,000 down to 5,000? Would I freak out and sell that? Or would I buy more at those lower prices and get in the community with Chris, Travis, and Nikki and learn how to do it the right way, right? That's my advice, is like, I think everybody should own some Bitcoin, but first and foremost, you should learn the basics of security and hardware wallets and, you know, just all the regulatory shit that comes along with this. And it takes time, it takes effort, but that's where the profits are. Things that are just layup easies, you know, like low fee index funds, you're going to get a low rate of return on that because it's easy and everybody does it, right? With Bitcoin, if you buy when things are ugly and when the media is trashing it, that's where you make the biggest gains. Yeah.
I think I think that's well said. And, you know, when you look at the Bitcoin chart, I mean, we've seen this time and time again, right? Like a pullback eventually is likely to happen. We don't know like how far this run is going to go before we see that pullback. It looks very strong still. And that's why your advice of making sure it's an amount that you're willing to kind of sit through a even deeper correction through the 90% drop down is really good advice. But what we do know is likely there will be another opportunity to add or to get a better price down the line. So it's
here's how the market sentiment works. All right. Going from the most bearish to the most bullish. So in March, when it was panicking, everybody was selling market order, sell. The market sentiment at that point is you have, all the mainstream media outlets that are like, Bitcoin's dead, right? They write the Bitcoin obituary articles, which if you go to 99bitcoins.com, you can see all the Bitcoin obituaries that have been written since like 2011 or 12, I think. And then what happens is price starts to come back and nobody believes that it's real. Right? Everybody's like, oh, you know, they're feeling the hangover from the dump. And then you get the first breakout and there's a little bit of hope, but it's still, nobody believes it. It isn't until you get like an all-time high breakout that the mainstream media starts putting out the puff pieces, right? So when Bitcoin's price is high, they say everybody got lucky, right? And Bitcoin's a bubble. Right? That's the narrative. When price is high, everybody got lucky. Bitcoin's a bubble. When price is low, Bitcoin is dead and Bitcoin investors are stupid. Right? That's the attitude. So when everybody's calling you stupid and calling for the death of Bitcoin, those are the most profitable times to buy.
Same with stocks.
That's right.
Exactly. Yeah. Well, what are some examples of some stocks that had a similar narrative in 2020?
Well, the broad market in March, you know, when we were eyeing that huge panic that happened and everyone was like, oh, Great Depression, you know, is about to come and everything's going to go to zero. Hide your, you know, whatever. Sell your stocks. Get out of the market. You know, it's the same idea, right? Like you had to have the courage to step in when everybody thought everything was just going to hell in a handbasket. And
you guys did. And you guys crushed it.
And that's where the big returns come. So, yeah.
Trav, thoughts?
You guys have said it, you know, and we've talked about this a lot over the last few months. I don't want to beat a dead horse too much. I could give some examples of some stocks though that I think, you know, that we had entries on in March that where the short-term price was dislocated from the long-term opportunity. And I think that provides some of the most interesting opportunities sometimes. So Wayfair, Wayfair was an example of a stock that traded through its historical valuation range and then some. And it was trading for 0.2 times forward revenues. And, they did actually pick up a tailwind from the pandemic, which I think a lot of people did not expect in March. But this is a business that had been historically growing 25 to 30% on the top line, huge total addressable market opportunity. There definitely are some issues with Wayfair as far as some of their, the cash burn as we moved into 2020 was a little bit too high because they had entered a few too many markets at once and things like that. But it was all manageable. And they raised a convertible note in the crisis to give them enough runway to get through the crisis. And the stock traded down to a level that was, basically down 90% from where it was trading pre-pandemic at a level that was just really absurd when you looked at the long-term opportunity. So that was a great one. I didn't expect it to go from, $26 a share at the bottom to $350 at the top, basically more than a 10X in like less than a year. But, still it was a pretty interesting risk reward at that point. Square, another great example, Square, when the pandemic hit, everyone's like, well, their main customer is the small and medium business, and that's not going to do well in this pandemic. And that was right. But if you thought about like the long-term opportunities of Square and disrupting, a lot of the SMB payment infrastructure and providing software backends for a lot of different SMB type of problems and things like that. And then also the consumer side with Cash App, like there's just so many growth levers there that will be tremendous growth levers for 10, 15, 20 years that when you get a sell-off where it's down 50+%, like, businesses trade on the value of their future cash flows 20, 30, 50 years out in some cases. So that was just an interesting divergence there between short-term price and long-term opportunity. I think those are some decent examples. We could probably think of a number of others, but.
Yeah, no, I mean, that was great. It was, Square was down 60% and then up 650%. Like those are the types of rips you're looking for.
Hopefully by now people aren't as afraid of corrections after listening to us all of 2020.
Yeah. I mean,
in Bitcoin and as any asset.
100%. Why don't we move on and talk about, I guess, what's kind of happening on a more global kind of macro scale. And obviously the vaccine is out. Cases are still rising. Nikki, I think stimulus checks in the U.S. have hit. Is that right?
Yeah, stimulus checks are starting to hit bank accounts.
Mm-hmm. As of today, we've got the Georgia runoff election. We've got, still infighting. Trump's trying to hang on to whatever piece he can. There's still a lot of, I guess, kind of risk in the markets. And as of right now, the stock market and Bitcoin and a lot of things are still up around all-time highs. So the big question is, well, where do we go from here, right? Do markets just keep ripping? Are we due for a correction? Maybe we can tackle this kind of one by one.
Yeah, as far as the broad market goes, I do think that we have the stimulus package that just got released with the stimulus checks plus another round of paycheck protection program loans. So PPP loans. So I think that there's enough stimulus right now to kind of keep the market kind of in this slow bull grind with the vaccine news. Hopefully, we just kind of see that steadily and that keep the market steadily increasing over time. As far as huge, big corrections and like what any type of huge black swan that we're looking at, I mean, if something happens where a variant of the virus isn't working or the vaccine isn't working and the cases just keep going up and we don't know what to do. And by that time, I'm just at this point, I'm like, we're all just gonna have to get the virus at some point if that happens and everything's just over. I don't know. But what's interesting is that Biden has kind of made a comment that the $900 billion of stimulus that was just passed is a down payment for what is to come in 2021. And if that's the case, and if we do see more stimulus coming, I think that could help sustain the stock market going forward. I do think that
I wish I had a money printer go burr sound on my little soundboard here.
I don't know. It's getting really interesting, because I think we were going into 2021 thinking we were going to get all this relief. Like the vaccine is going to solve problems and the stimulus will solve problems. But here we are, we're seeing, the UK extending lockdowns. We're still seeing cases rise. So I don't know. It still kind of feels like we're in this difficult zone to try to predict either what the market's going to do or what our economy is going to do going forward. But ultimately, we all have this anticipation that 2021 is going to be a great recovery year. It's going to be a recovery year for our economy, for traveling, all of that. So whether that actually happens, I'm not quite sure.
Travis, is this a sell on the news event where if the vaccine does have a massive effect and they stop the stimulus, does everything just kind of pull back at that point or just truck along?
I mean, yes, that would be a concern, but I'm still pretty optimistic. And here are a couple of reasons why. So I think looking at the vaccine rollouts in December, when we had, 2 weeks of holidays where a lot of, state and federal employees aren't even at work, I think is maybe not the best way to think about like vaccine progress overall over the next 6 months. Like, yeah, it's pretty bad in a lot of places so far, but I think rapidly states and governments are going to get their act together. And so, especially with the holidays now behind us, I'm more optimistic about the pace of vaccinations and things like that. So yeah, it's January, February may not look super great, but I think as we move through the year, like things are going to pick up on that front. So I'm still optimistic there. If you look at data from like Australia and places like that had a really hard lockdown, but then have really reemerged, places like China, Australia, et cetera. The data, when you look at, restaurant dining, if you look at travel, that's a good thread actually there. You can see that the numbers are actually bouncing back extremely aggressively. In fact, levels above the pre-pandemic. And so I think, I'm still pretty optimistic that once the world really reemerges, say, call it back half, probably late spring, early summer starting, but through the end of the year, certainly there's going to be a really, really aggressive, move back into society and people are going to have this pent up demand for all these different things. So I'm pretty optimistic on the economic activity front, even if in the near term, it might not be great. One thing to put on the radar, though, that does give me a little bit of concern in the near term for the market and how it might react is these Georgia special elections. And why do these, why does one state's special elections for 2 senators matter? Well, it matters for the balance of power of the overall U.S. Senate. And that actually can have a pretty big effect on the legislative policies over the next 4 years. So the Democrats obviously still have a slight majority in the House. The Republicans have a slight majority in the Senate, which creates a little bit of gridlock. And the market, I think, saw that after the elections as a good thing. But now with the Georgia Senate elections, it looks like the Democrats do have a shot at winning both of those Georgia Senate seats. And if they do, and we'll know by tomorrow probably what the outcome is, if the Democrats do take those 2 seats, they will have a technical slight majority in the Senate, which gives them control of both houses and the presidency, which would essentially mean a pretty big change in overall ability to do all the things that the Democrats want to do on the legislative side. And that could have pretty big effects on things like corporate tax rates, things like healthcare policy, things like stimulus policy, certainly lots of other areas, whether it's deregulation of cannabis or, there's just a lot of potential impacts from that. And so that, I think, could give the market some surprises that it wasn't necessarily anticipating a month ago. But it'll be interesting. If the market holds up in January and February, then I think we could see another pretty strong year, especially in pockets of the market, because as we move forward to the times of economic activity where it's really going to be picking up, inflation's picking up, like the market could be, if it's already, holding up during periods of uncertainty, then when we get to that period, the market could be really strong again. I don't know.
Nick, what do you think? I know you've been following that.
I'm feeling a bit torn, to be honest, when it comes to the Senate race, because I guess I can see, like, obviously, tax legislation is something that's a big concern on my mind. I think that's a bigger concern than, say, tech breakups. And that would be bad, right? I don't want to say it'd be bad, but there would definitely be some things to consider that could affect the markets there. And then on the flip side, if the Democrats do control the Senate or have that slight majority, you have things like infrastructure spending, you have things like stimulus that's probably going to go ham. They're going to be giving out money left and right, right? And those are the types of things that, so either we get like things kind of stay the same, or we get, and the market likes that, right? The market hates change. Or we're going to see all of this spending, and I can see some of these things also being positives for the stock market too. I don't know if you guys are thinking of it that same way, but I don't know. That's kind of where I'm at with it. It feels like there could be benefits on either side. So from the crypto side, obviously the more printing that happens and the more people that start to question the value of the dollar, the better that is for Bitcoin and other cryptos. Yeah, but I'm thinking more specifically, like, how is the market going to view all of this, and how is the market going to actually respond to it? Right. You know, but yeah, you're right. I mean, that would be great for gold, and all that spending would be great for gold and crypto.
Yeah. Speaking of gold, let's take a look. It's actually gold and metals in general are popping. So gold's actually been in a bull trend really since summer of last year. Once we broke out of kind of the 1400 resistance level, this has been a great trade for us. I've been building into this position for several years, and we're finally getting follow through, just nice run and retracement to the upside. And as of today and yesterday, getting another rip back up above the moving averages. So I wouldn't be surprised to see this convincingly break the all-time high, right? Like we had a spike here back in the summer where we got up to 2100 and then it pulled back, but I'm actually still relatively bullish on gold. Yes, of course, to all the crypto junkies out there and degens, like gold has severely underperformed Bitcoin, which is why my Bitcoin holdings like just overshadow my gold holdings. But I do like to have this in my portfolio too. Also, silver has been popping back up to challenge the $30 level. And if you look at kind of the gold to silver ratio, silver's really caught back up with gold. So we're back in kind of that historical median range in between like 60 to 70 ounces of silver per gold. So pretty interesting to see there as well.
Something that No, go ahead. Something that I actually looked into yesterday, because I was thinking about, the recovery in 2021, and I was looking at actually hotel stocks. And I don't know if you guys know this, but because I was thinking there could be a trade there. And because I think 2021 for travel is going to be insane. Like as long as everything goes well with the vaccine and we can find some normalcy here, I think travel is going to be crazy. Yeah. And I was thinking, well, a lot of that travel overflow is going to go, if Airbnbs get booked up, it's going to flow into hotels. But a lot of these hotels are like right back to where they were pre-COVID. The stocks are. So
give me some tickers. I know you guys were in TripAdvisor, which is not a hotel, but
yeah, Trip was one, but this.
I mean, if you look at Marriott, Hyatt, Starwood, most of those stocks, most of the hotel stocks and resort stocks are very close or at their pre-pandemic levels.
Yeah, like with them, and I was like, because I really was thinking about that as an opportunity, but I didn't realize how much those stocks had recovered.
Wow.
So
yeah, they are already up, 100 and 200% off of the lows in March. So yeah, those are, I guess the expectation there is like, we're not the first people to have that thought, right?
Yeah, I know.
So probably a little late to the game on that.
Darn. Oh, well.
Yeah. I do have one or two travel related stocks that are well below their pre-pandemic levels that I think could be interesting plays that I'm working on right now. So I might have one or two for us in the next.
Okay, good. Because I love this concept. I've been talking about it. I just haven't really made any action on it. TripAdvisor was kind of my way of playing that, but yeah, good to know.
Yeah, we had the Mexican airport operator and the TripAdvisor. Those were, I think, two of our travel focused plays. And I may be forgetting one or two others, but those were pretty good plays, I felt like, but you could have just bought the whole sector basically.
Yeah.
Yeah. Oh, one more thing I wanted to mention is Ethereum. So as you guys know, like I was actually very bearish on Ethereum throughout 2019 for the most part, because it had so many bag holders from the 2017 ICO bubble, right? Anytime you see a big parabolic kind of boom and bust pattern like this, you have to work through all of those bag holders. And so summer of 2019, I guess, I had a smaller trade. We had a trade from like, what was this, 180 up into like the 300 level. And that was really the last trade I had on Ethereum until this year in the fall. I got the heaviest I've been in Ethereum ever, because I had a lot of conviction that we were actually shifting. And with all the DeFi projects that were kind of driving activity on the Ethereum network, I was pretty bullish on this. And so we got heavy long in the 300s. I had some ads, I think even in the low 400s. And then as of today, it's up around 1100. So this has also been another monster trade for us.
Yeah, we talked about Ethereum a good bit over the last few episodes of We Talk Money in 2020. And I think we're both excited on the fundamental side and also the technical side as you laid out. And that's been a fantastic winner so far. But if we think about like long-term potential here, I still think this is super interesting. And, you know, I'm not an expert by any means, but I think the opportunities for things like smart contracts are so massive and are really untouched as of this point. Yeah,
no, I agree. And, you know, just like any new space, anytime you have a lot of innovation and growth, you get a lot of scams, a lot of bullshit, and really a lot of well-meaning projects that are just going to fail because that's the nature of startups. But so far this year, you know, just over the past couple of weeks, we've actually seen some DeFi, I'm using my quotey fingers, some DeFi coins that have been ripping. And I've already started to build into a few positions that are starting to take off. So I think 2021 is going to be a big year for some of these crypto projects. And I think now is the time that if you haven't done the work, if you haven't done research and educated yourself on this stuff, you don't want to get left behind. That's all I'll say about that. So, yeah, awesome. What else, guys? I know we've gone through quite a bit. We've talked about, you know, the markets in general, talked about our best friend, Jamie Dimon, putting 150K profit target on Bitcoin. Talked about the regulation. Oh, one more thing I want to say too, is, you know, Nuchin and FinCEN have been basically trying to push this last minute, what do they call it? Midnight rulemaking. I'll link to this in the show notes, but go to stopfinancialsurveillance.org and you can read about what this ridiculous regulation is, where they're basically trying to KYC your hardware wallets or put tie identities to hardware wallets, which in my opinion is just so stupid on so many different levels. I'm not going to read through this. You guys can go read through this, but you can go here and if the thing is still open, you can still submit a comment. I know a lot of the larger crypto companies have been very vocal about this, and also non-crypto companies have also been vocal about how this is just detrimental and dangerous. So on one hand, we've got the OCC that's putting in smart regulation, and then on the other hand, you've got FinCEN and Mnuchin, which is trying to pass just, in my opinion, very, for lack of a better word, stupid regulations. So make your voice heard if you haven't already done that. What else, guys? What do you want to wrap it up with this week?
Well, should I buy Tesla calls for the $1 trillion market cap touch? Yeah. That's likely going to happen because
when do you guys think? Well, okay, let me ask you two questions. Is the market going to run Tesla to $1 trillion? And if so, when is it going to do it by?
Next week. No, I'm just kidding.
I think it will.
What's the fully diluted market cap right now, Trav? I know you said a lot of the websites are actually incorrect on this.
Yeah, because they're not counting in Elon's shares, but also the shares from the most recent offerings. So it's about an 800 billion fully diluted market cap. So we're not that far off the $1 trillion mark. About 25% more to go, and we're there. And, that also happens to coincide almost around the $1,000 price per share level. So it's that's a really interesting psychological spot for a lot of reasons.
Yeah.
That's exactly why I think it'll happen.
The market.
By the way, Elon, you're going to see headlines this year that Elon has become, on paper, the richest man in the world. If Tesla stock does go up to the $1 trillion mark, and it's even possible, even if Tesla stock stays flat with today's level, SpaceX will probably do another fundraising round this year at a higher valuation, and that I think will also help put him at number one. Very, very interesting. So you're going to see some interesting headlines around Elon this year. Not that you are ever short of interesting Elon headlines.
Yeah. Awesome. All right. Well, what else are you guys excited for in January? Or is there any big news pieces or kind of anticipatory things that we can look forward to?
I mean, earnings is kicking off towards the end of the...
Yeah, it really starts the third week of January, gets us kicked off. And then, moving into late January, early February, we get the Q4 earnings report season. So that'll be a lot of interesting news coming out. I think we're going to see a lot of M&A in the next couple of months. So I do believe it's going to be another banner year in terms of acquisitions being announced and take privates and things like that. So I do expect a lot of interesting action from M&A. There's just so much liquidity. There's so much, stock prices are up so much that, companies will be able to finance deals with combination of cash and stock and things like that. So I think it'll be a big year on that front. We'll start to see a lot of those types of announcements in the next probably 2 to 3 months.
Awesome.
Do we want to make a bet? I agree, Trav. But do we want to make a bet? I'm back on my Tesla train that Elon puts Bitcoin on the balance sheet this year.
Oh, that's a good one. I think he's going to do it. I think
he's going to do it too.
Yeah.
Okay.
What do you think? What's your bet?
Wow. I don't know.
You want to bet a Bitcoin that he will do it?
No.
I'll bet a Bitcoin.
That's a tough one. I don't know. I mean, his board will let him do whatever he wants. So if he gets enough conviction, I think he may do it. I haven't seen enough from Elon in terms of bullishness on Bitcoin. He likes to tweet about Dogecoin and he likes to, he likes to say it's interesting, but I don't feel that he's the level of like Michael Saylor or Jack Dorsey where he's fully bought in yet. Yeah. So it's tough.
He started to ask the interesting questions though. There was a thread that went viral.
To Michael, right?
Yeah. He's like, wait, can you even do transactions
like, you can do that
big? And then of course the crypto or the Bitcoin community was like, hell yeah, come on in, buddy. We'll take good care of you.
Yeah.
Awesome.
Okay. Well, do you want to end the show today with something you're working on in 2021?
Yeah, we've got this show that we've been working on. It's called We Talk Money. Go to wetalkmoney.com. Submit a question for the show. We've got by the way, we didn't pull up any questions this week, but we will hit them next week. You can come in here and you can subscribe to the podcast. You can listen on Spotify or YouTube, submit a question, and we'll answer it here live on the show.
Yes.
We're looking forward to doing the live ones. I don't know about you guys, but I do like doing the live shows more than the pre-recorded ones. What do you guys think?
I do like the live show more than the pre-recorded. Yeah.
I feel like I'm just an idiot sitting in my studio alone without, the interaction. Like I feel like I'm just, it's not quite the same. Like I don't know. I feel off today. Why am I off today?
I feel off too. I was thinking, I was going to tell you guys today, like, man, I need to get back in the groove. I'm garbage today.
We're coming off of a few weeks of a vacation again, so I'm looking at this first week as like getting back in the groove.
Yeah.
Next week we'll be back on our game 100% though.
Yeah. But I do feel like the Zoom experience has a little bit to do with that. So I always enjoy being in the studio and I'm looking forward to being back in the studio for We Talk Money.
Yeah.
And we also have so a lot of interesting things we're working on for the community this year, but one of the big ones early on in the year is our boot camps. So I've been prepping some stuff to do another live stock boot camp here in the next month or so, and making a lot of different improvements to that. So I'm excited about that. And, you know, I've put, I don't know how many hours, hundreds of hours of work into it already. So I'm pretty pumped about that.
Yeah,
it's amazing.
We only did one boot camp last year for some reason, but we did launch yours, Trav, and I know a lot of people have been really waiting anxiously for that. So looking forward to getting that out to our community. So awesome. Yep. All right, guys. Well, thanks for watching. Welcome to 2021. Look forward to having another wildly profitable year with you guys, and we'll see you guys next time.
Cheers.
Yeah.